Let's pick up on the markets now. The local index looking set to contend with mostly higher global trade this morning, with sentiment still somewhat positive as investors eye the possibility of the U.S. easing off on tariffs on China. Matete Thulare is head of foreign exchange execution at Rand Merchant Bank, and he joins us now to give us his analysis of how the stock exchange is performing in early trade. Mr. Thulare, thank you very much for your time. Let's perhaps deal with this question. It's the first full week of July, and it's about to end. Will this market mayhem and the Rand slump persist?
Good morning, Polly. I suppose you're very right. I mean, the Rand continues to dip. I mean, really, markets are concerned about the global economic slowdown that is looming, and obviously they are discarding riskier assets such as the Rand. Just on Wednesday, we saw foreigners selling about 2.7 billion rands worth of local bonds, which is the highest since June the 23rd. And obviously risks is very high, and the sentiment is quite fragile at this point in time, and the moves have been really fast and very fragile, and we may need a bit of consolidation. But I mean, if you just look at the Rand on a year-to-date basis, we are the 8th worst performing emerging market currency, having lost about 5.2% against the dollar, whilst the Turkish lira is actually the worst performing emerging market currency, having lost about 25% this year. But the flip side of the coin is very interesting, because the Russian ruble is actually the best performing emerging market currency on a year-to-date basis. That's gained about 16% against the dollar. So, if you think about it, obviously, into the close of the year, in 2 weeks' time, we do have the Central Reserve Bank locally giving us an interest rate decision. I think Lesetja Kganyago will be quite prudent in terms of his thinking, given the fact that from a global economic point of view, things are not looking too rosy. We've also got the local issues in terms of Eskom also coming out. And also we're edging closer and closer to the political uncertainty with regards to the ANC's policy conference and also the elective conference in December. And from a global perspective, we are just looking at copper prices, and which is quite an interesting antidote, Tolly, is the fact that copper prices have fallen 20% in the past 3 months, and that's the worst quarter in a decade. Now, copper is often seen as a barometer to the global economy to gauge whether the global economy is actually growing or slowing down. And what we've also noticed is the fact that a copper market, a copper bear market where we've seen this collapse, has happened before each recession in the past 30 years, which could obviously indicate that there is another economic downturn that may be underway. And as the market is already pricing in a recession at the beginning of 2023 in the first quarter, so there is deepening fears about all of this global economic slowdown and a recession. And that's why I think at this point in time, given where the Rand is trading, our analysis is potentially it's only a matter of time before we see 17 against the dollar.
Oh, that's a number of factors there you have assembled for us. Let's perhaps hone in on one of them that you've mentioned, politics. And it is the end of Boris Johnson's run as Prime Minister, and it's expected to ease the sense of political chaos somewhat. But will it fix the deep economic issues plaguing the UK economy, keeping in mind that it's one of our major trading partners?
Well, I suppose what you also need to take into account, and I think this is the problem with the market and people as well, is the fact that we look at the here and now. But I mean, if you think about politics, it's become a really big, significant player in economics and the financial markets. Just 6 years ago, we had the likes of Brexit, we had the likes of Mr. Trump coming in, and also we've seen the geopolitical tension out in Eastern Europe with regards to the Russia-Ukraine situation. And now, you layer that on top of the fact that, you've also got local political issues, and then the UK now has Boris Johnson resigning. So if you think about it, yesterday was quite a very volatile session in the UK market, especially after Mr. Johnson resigned. But obviously he is staying with a caretaker prime minister position there up until October. But nonetheless, I think it also highlights the fact that there's been a wave of resignations in his government. He has also been engulfed in a string of scandals, including violating COVID-19 lockdown rules. If you think about it, we also had the same issue a few months ago where a local minister also violated some of those rules. So I think also you just need to take into account that these things happen globally. But also Boris Johnson, he survived a no confidence vote in June. That something similar happened also locally with some of our presidents. But also, I think the camel that broke the straw was the fact that he had groping allegations against one of his recent appointees, which obviously pushed the ruling Conservative Party into an open revolt. And I suppose also the mere fact that the market has been waiting for him because he has prolonged the pain by threatening to tear up the Northern Ireland Protocol. He's also put Britain's trade deal with the European Union at risk. And also, in the near term, I mean, we have seen rising energy costs that have hit retail sales and also the consumer confidence in the European and London market. That is pushing the economy in the UK to a brink of recession. And also, when you just look at some of the analysis that has been done by the Bank of England, they found that uncertainty has held back investment in the UK on the back of Brexit and also COVID-19. So it is also going to be quite interesting for the new Prime Minister that is going to come in October to see what they do with all these problems that the UK faces.
Yeah. Let's talk ratings agencies. Overnight, Fitch affirming South Africa's long-term foreign and local currency debt ratings. Talk us through those developments and I suppose the overall wrap of the ratings agency's tone of South Africa right now. I suspect you might be tempted to touch on load shedding here.
Look, they released their outlook last night and it was very welcome. But, I think we all know the factors that are affecting South Africa at this point in time. They have highlighted the power problems that we are facing. They have also highlighted the high inflation. That's a global problem. But also they are affirming our long-term and local currency ratings and maintaining a stable outlook, which is very much welcome. But I suppose also the affirmation takes into account that government debt journey is obviously slightly lower than anticipated, but I think also there's several key credit metrics that include the current account balance. I think that also is a factor of where the commodity boom and how that has helped the fiscus and obviously helping Minister Godongwana, especially given the fact that in the next 3 to 4 months we do have the medium-term budget statement. That's also going to be quite interesting. But also I think they have highlighted the fact that government is slowly making progress with regards to the reform agenda. I mean, if you think about it, we did have the auction spectrum coming into the market a few months ago, but also the scale of measures beyond electricity with regards to also the red tape and the visa side of things. That also needs to have a significant difference to make a potential growth outlook, look even sizable in the medium term. But also, I think what the interesting part was the fact for me was the fact that the ratings agency is predicting that the revenue again this year will exceed government forecasts before slowing significantly, which is obviously going to be quite interesting given what we've seen with regards to the Transnet issues where we can't export as much mineral resources. I mean, we have seen that we've lost quite a significant amount of revenue just from the likes of coal, iron ore and chrome that government could have gotten in terms of their tax revenue. But also, I suppose, Fitch also highlighting the fact that government also needs to really make sure that there is a wage restraint with regards to obviously the public sector purse, which has been something that they have maintained over a significant number of years.
Yeah, let's conclude the conversation with a bit of company news, Matete, and you'll correct my pronunciation here. A company called Group Canal Plus has upped its stake in MultiChoice to over 20%. Is this a slow takeover of the group?
Well, this is quite interesting. I mean, if you think about it, this is, a Joburg listed MultiChoice group, which is, around the corner from you guys. Obviously, the French media conglomerate, Vivendi, they're the ones that actually own Group Canal. And, Group Canal has actually began buying up MultiChoice shares in 2020. It's the first time that obviously the parent of SuperSport and DSTV has disclosed the change in Canal's shareholding since November last year. I think last year at this point in time, around November, Group Canal had snapped up about 15% of the shares in issue. So it looks like, Vivendi, which is obviously the conglomerate, they're beginning to buy MultiChoice shares, obviously 2 years ago. It's really prompting speculation as to exactly what do they really want to do. This has obviously fueled a sharp rally in the MultiChoice shares. But I think, in October 2020, we did see MultiChoice at that point in time saying Group Canal had acquired 6%. So over the past, call it 2 years now, they've acquired an additional close to 14%. So it does quite show that, Vivendi, they're saying that, look, this is a financial investment for them, and they believe that there's quite magnificent synergies between Canal and MultiChoice, and obviously this is going to be something that they're looking to make sure that they, delve into the African market and obviously see how they play themselves out, given the fact that they've been predominantly based out in Europe.
Yeah, we're going to watch that space very closely. Thank you very much for that markets update, Matete Thulare, Head of Foreign Exchange Execution at Rand Merchant Bank.